right, we're rolling. It's your guy, Geeto the Great, Guy Rane, here with my right-hand man.
Palmery, how you doing, everybody? Palmery, Good Money Podcast.
Good Money Podcast. So we got a special guest today. You want to give us a little breakdown on our guest?
Yes, so thank you for that, Guy. So I asked Mr. Menjivar of American Republic Metals to join us this evening. He and I have been working together to help some of my clients, some of my accredited investors, as far as growing their gold portfolios, right? Because I have some clients that have expressed interest in physical gold. So, I recently connected with Rick, and he's been instrumental in helping my clients fulfill their goals as far as physical gold is concerned.
Let us know a little bit about yourself, Rick, little back history.
A former commodities broker out of Chicago, and basically started back in 2008, a commodities broker and foreign exchange specialist as well. And we were basically trading in metals, oil, currencies. So that's how I got into it. I actually got into precious metals, into the physical precious metal sales, approximately in 2000, I'd like to say 2016. That's when I got into physical precious metals, and I've been doing it ever since. Worked with a number of companies, and now I'm the senior partner and the head of research here at American Republic Metals.
So, Rick, if I may ask, how did you get into the gold business?
Well, because I had a background in commodities. One day I decided basically to look into companies that were selling physical precious metals, and went to work for one of those companies, and that's basically how I got in. It wasn't a difficult transition since I had already been dealing in commodities, and that's basically how I got into the business.
Very good, very good. And so, around about what year did you get in?
It was around 2016 when I got in.
Gotcha. Okay, so you were like pre-pandemic coming into the gold sector.
Yes, definitely.
So you enjoyed that nice little bump from 1,500 an ounce to
15
where
all the
we're
way
at
up.
now, huh?
Well, it was actually the bottom, because when President Trump got elected, metals came crashing down. Gold actually came down to $1,300 an ounce, and silver came down to $13 an ounce. So from there, that's when the market got interesting, because we were able to position a lot of clients at severe discounted prices. I mean, now we have silver currently trading today at $42 an ounce, and we have gold today hit a high of 3,700 and then ended up settling at 3,680. So yes, we're definitely benefiting right now from all these years.
Yeah, I remember last year when it was at 2000, and around that time, I was following gold a lot because I was doing a little bit of trading in the Forex market.
Mm-hmm.
So, and I kept hearing everybody saying it's going to hit the 3,000, it's going to hit the 3,000. So that was
Yeah.
about a nice leap just in that 1 year. What do you think accounted for that?
Well, one of the things that accounted for that is that in 2019, there was an agreement signed by all central banks and governments called the Basel III Accord. Now, when they signed it with the intent that if there was ever a financial crisis that occurred, they would then create rules and regulations to reinstate gold back into the banking system as its own currency. Well, the pandemic hit in 2020, and that justified a financial crisis, supply chain breakdowns, and everything else that came along with it. So the thing about central banks is that when they decide they're going to do something, they don't do it right away. They take their time, and they took 5 years, which is quite a bit of time. In July 1st of this year, they finally came out and reinstated gold back into the banking system as a tier 1 asset. So these are the changes that have brought about price of gold actually going up further and further.
Do you see it rising much higher? I know a lot of people are looking at the 5,000 mark. Do you think it's going to continue?
Yes, many economists basically have been forecasting that we're going to continue to see gold continue to rise. One of the reasons right now is that we created a tremendous amount of debt as a result of the pandemic. And not just ourselves, but everyone around the world. And as a result of it, central banks are now hedging their bets and buying as much gold as they can. And so they're the ones that are actually driving the price of gold. It's not the retail market. The Indian market is only so big, and they're not wearing that much jewelry to drive the price of gold up. So it's really the institutions that are now stepping up and driving the price of gold, to higher and higher levels than we've ever seen. No one ever believed that we would ever get to 3,000. I did.
Yeah.
When they signed the Basel III Accord in 2019 under the Bank of International Settlements, that for me was the trigger, and I said, "Oh wow, this is going to go much higher than anyone's expectation. It's just going to take time, and they're going to be very discreet about how they do it."
Hmm.
And a lot of people are kicking themselves that they didn't buy gold when it was at 1,500, 1,800, because you would have doubled your money by now.
Yeah.
Easily.
So you're saying that the Basel III Accord was put into practice or put in place pre-pandemic, yes?
Yes, it was signed as an agreement that in the event of a financial crisis, they would then implement protocols for gold.
So do you feel like institutions reacted? Because I saw gold jump from 1,500 to about 2,000 an ounce. Do you feel that that reaction was due to maybe the stimulus that the government had rolled out at that time?
It's hard to say at that time, because at that time, the only thing that they could use it for is really as a hedge against currency devaluation. And I
That's how
think
I
that's
always
what,
looked at it.
yeah, and I think that's really what they've been doing recently.
So I know you said something about the debt and institutions buying up. So there's a lot of talk about the devaluing gold in order to offset the debt.
So what the Fed did a couple of weeks ago is that they basically posted on their website that they are considering revaluating gold.
Hmm.
Now, that takes quite a number of steps to do so. But the only reason why they would even consider that is because we are about to cross a threshold regarding the debt that we're creating. Many economists feel that once we get to 39 trillion, we won't be able to pay the interest on that money, and we could default. That would be devastating for the US dollar. So this is one reason why gold is in play.
During a little bit of research, I've noticed that gold as a fashion item, right, or a display
Mhm.
of luxury has gone down. But I'm also noticing that institutional investors have been stepping up their purchasing activity. And so, as far as the central bank is concerned, prior to this new accord being put in place, their borrowing capacity was capped at 50%, as I understand it.
Correct. So gold realistically was, if they were going to use it as a financial instrument, it was considered a tier 3 asset, and financial institutions could only leverage it 50% of its value. Now, as a tier 1 asset, they can put it on their books, on their financial statements, and they can basically leverage it at 100% face value. So this has changed the dynamics of gold and the valuation as a result of it.
So they could basically add it to their assets while increasing,
Yes,
basically.
correct.
So that theoretically would increase their borrowing capacity, right? Because they would pledge that gold as collateral, right?
Correct.
Which would increase their borrowing capacity. And so is the idea with revaluing gold and now they're at a tier 1 asset and they can borrow 100 cents on the dollar, is the idea is to maybe take on more leverage to pay down their obligations so they're not incurring as much debt?
So one of the things that the Fed, looks like they're going to do is, and we don't know what the price point will be for the revaluation. No one has an idea. As an example, let's say that they decided to revalue at $10,000 an ounce, as an example. It could be much higher. I think that the number is going to be much higher. We just don't know. We don't know what the number is going to be or when it's going to be. But as an example, what they're planning on doing, and this is, on their website, is that they're planning on taking the certificates for the gold that they have in place, which are valued at around $410 an ounce, and then issue new certificates with a higher valuation. Now, that higher valuation, again, no one knows what the starting point is going to be. There's a lot of chatter out there that it could be 25,000, 50,000, 100,000. No one knows. No one knows yet. And that's why I tell people all the time, look, we know that central banks are using this, and we know that they're in trouble, based on the amount of debt that everyone has. Why are countries right now searching for gold deposits? I mean, hell, in Africa, they're looking for gold in every country they can find. In China, they found I believe it was a $72 billion deposit. In Mexico, I think in Zacatecas or in Quintana Roo by Cancun, they found a deposit that is worth trillions of dollars. I think the number out there is 10 to 12 trillion dollars. Well, that could change the face of an economy in a country. If I'm not mistaken, I think it's Rwanda that found a $13 trillion deposit in Africa. The question is, can they access the gold? How quickly can they access it? Because that's really, you can find a deposit that could be worth trillions, but if you can't access it, it's useless to you. It's just,
Yeah.
A paper valuation. So that's something that we have yet to determine. But what we can say and what we can tell from this is that countries are scrambling to find gold wherever they can. And that means that central banks are probably going to, use gold as a financial instrument to revalue and potentially pay down debt. It's possible that is, the scenario that a lot of people are talking about.
How does that look for you when it's everything you're doing?
Well, a lot of our clients, we got a lot of our clients in when it was at around $1,500, $1,800 an ounce. Now it's at, 3,600. So a lot of them have more than doubled their money. We feel that the value of gold is going to continue to rise. Some analysts feel that by next year we could see $5,000 an ounce. I think they're right. I think they're being conservative because we're in a trade tariff war right now, and that's not looking good. And until we find a resolution to that, that is going to cause quite a strain on the U.S. dollar. Now, today the Federal Reserve lowered interest rates a quarter point.
Point.
That doesn't help the dollar. That actually weakens it. And if they lower another, half a point or 3/4 of a point over next year, you're gonna see the purchasing power of the U.S. dollar decline. But what you're gonna see is that you're gonna see the value of gold take off.
Yeah.
So, Rick, a lot of what we discussed, right, in my opinion, is like 30,000-foot view in the air, right? And so for our viewers and my audience and Guy's audience who will be viewing this,
Hmm.
how can we take advantage of the situation? Because we know that gold is going higher, right? There's no doubt about it. Like, there's no doubt about it.
Correct.
I
Correct.
remember I remember during the pandemic, Rolexes were shooting up in value, right? Gold Rolexes or whatever have you, or gold, different brands of gold watchmakers were shooting up in value as the
Mm-hmm.
price of gold was ascending in value as well. But how
Hmm.
does the everyday person, with a decent income, decent salary, some
Hmm.
assets on hand,
Hmm.
how can they position themselves to take advantage of what's to come?
So what a lot of people are doing is that they're converting part of their savings that they have in the bank, cash, into precious metals, into gold and silver, primarily gold. Then there are others that are diversifying their portfolios, like their retirement accounts, if they have a 4K, an IRA, ATSP, ATFs, and they're basically rolling them into self-directed precious metal IRAs that allow them to hold physical gold in their IRA. The precious metals are held in a depository in their name for the benefit of their IRA and the custodian. So that is the way that a lot of people are taking advantage right now in order to diversify their holdings and add gold and silver to their portfolios.
So now, the S&P 500 is sitting at all-time highs.
Hmm.
Mm-hmm.
We've got all of these mega cap and large cap companies that are, basically the market's printing money right now. But you and I both know that the music has to stop at some point, and reality is going to
Correct.
set in because we're going to go a little too far too fast.
Hmm.
For the risk averse viewer, how can they get started, and what do you think is a good recommendation for conversion of assets that are earmarked for retirement?
So that's a good question. And really, it's a personal decision. And I'll tell you why. There are people that, want to start off by moving 10, 15, 20% of their portfolio. Then there are other people that basically are willing to diversify between 35 and 50%. So it's a personal choice. You know, there's an apparent formula out there that worked apparently in 2008 on precious metals, which was if you had 30% of your portfolio back then in precious metals, then it offset a portion of your paper investment losses. How was that? Well, if before the crash you had 30% in gold and 70% was invested in paper investment stocks, bonds, mutual funds, etc. Gold from 2008 to 2012 tripled in value to 2011. That 30,000, let's say you would have had an example of 100,000. You took 30,000, which is 30%, rolled it over into a self-directed precious metals IRA. Well, that 30,000 for many people back then became 90,000. The 70,000 people left in the market actually depreciated and lost value. You could say went down 50% in value because of the 2008 market crash. Some lost more. Let's be conservative and let's say they lost 50%. Well, that 70,000 became 35,000. Well, those that chose to hedge with either gold or silver back then tripled their money. So that 30,000 became 90,000. Well, that 90,000 offset a good portion of the losses that they had in their paper investments in the 70,000. So when it was all said and done, because of the hedge, they were still left with 125,000. That's not bad. Now, what did they save is the question. Time. Time was in their favor because people that left all their money invested in paper investments back then when the markets came down lost 50% or more of the value of their portfolio. And it took 8 to 9 years for them to recover.
Yeah, you got to make
Correct.
100%. You
Yeah,
got to make 100% return to break even.
and that took 8 to 9 years for a lot of people to recover. Some people didn't recover at all. Now, the stock market's performed very well for a lot of people since then, no question about it. But what happened to the people that did diversify their portfolio? Well, they had time in their hands and they had more money because they didn't lose money. They hedged. So they were able to preserve the value of their portfolio. They could have converted the precious metals back into cash in their retirement accounts and reinvest that back into the markets. Well, that gave them a head start over everyone. So time is a major factor that people need to understand. A lot of people right now can't afford to lose any more money in their retirement account because they're retired. This is what they sustain themselves from. Imagine if they did lose 50% again. Could they go get a job? The answer is no. No. So these are the people that need to diversify.
I recently saw a Gallup poll that nearly 25% of Americans now see gold as the best long-term investment, outranking stocks.
Well, it's always been a good investment.
Uh-huh.
You have to understand, gold does not, physical precious metals does not give you dividends, just
Right.
growth and appreciation. So
This
Hmm.
that's
is
all
an
you,
argument I
that's,
hear often.
yes. And so, you know, I always tell people, listen, I'm not telling you to put all your eggs in one basket. That's not how this works. This is a matter of diversification. Why? Because you're diversifying for protection, storage of wealth, and capital preservation. The icing on the cake is growth and appreciation. No one ever thought we would be at 3,700 an ounce. No one.
Right. Right.
So imagine those that bought when it was at 15, 1,800. They didn't put all their eggs in one basket, I can assure you that much, but they did diversify.
Hmm.
And now,
Came out.
they've come out on top. Are we at all-time highs right now? Yes.
That
Gold
was the
has never
question.
been
Yeah.
Gold has never been at 36, 3,700. No, this is a first. The question that everyone wants the answer to is, will it go higher? And the probability is probably yes. We just don't know where.
Where it's gonna
But
cap.
the fact that central banks and the Federal Reserve have come out making a statement that they are confirming that they are probably going to revalue gold, and probably is a big word. For a central bank to make a statement like that, it means that the probability is high.
Yeah.
We
And they
just
put it on
don't
their
know
website
when.
too.
Yes, and they put it on their
Yeah.
website. We
Yeah.
just don't know when, and we don't know the price point. But let me ask you, gentlemen, a question. Do you think that the Federal Reserve is going to revalue gold at 10,000 where it would barely make a dent? Or do you think that they're going to revalue at a much higher price point where it would give them liquidity in order to pay down debt? And that's the question that everyone has to ask themselves.
Yeah, that'll
If
be
you're
the
gonna,
only way to go. I know they're saying close to maybe 25,000. So
That's
it
been the
has to be
chatter.
high to make
yeah,
sense
That has
if you're
been the
gonna pull
chatter
the
out there.
parachute cord, you might as well pull it all the way.
all the way, right?
Exactly, correct. Again, we just don't know when.
Right.
Mhm.
And again, let's talk about this. Central banks, when they implement monetary policy, they can take 2, 3, 4, maybe 5 years. The problem that they have right now is that we're going to get to 39 trillion within the next year and a half or 2 years.
In terms
I
of the
don't think
debt
they're
load.
going to exactly. I don't think that they're going to wait for
Yeah.
that to happen. They could pull the
You know what I
trigger
always
before
wanted to
that
know, Rick?
happens.
I always wanted to know how many times can the government raise the debt ceiling? Like throughout my whole career in financial services, they've just kept kicking the can with raising the debt ceiling, right? The world was going to come to an end. And I've always wondered, how many times can they keep raising the debt ceiling? But gold can play a crucial role. So if I'm trying to put this into context, gold can play a crucial role as a hedge inside of a self-directed IRA, right, or a solo
Correct.
401k, right? And that's something that your platform offers.
Yes, correct.
Okay. Could you
Yes.
talk a little bit more about your platform and how people can engage with you?
So if people are interested, they can go to our website, American Republic Metals. They can sign up for one of our wealth protection guides, which really outline the strategies and give you a lot of information as to how precious metals work and how they can work for you in your strategy, in your portfolio. Once we basically determine whether you're looking to diversify and protect a retirement account, again, whether it's a 401k, whether it's a Roth IRA, a traditional IRA, a solo 401k, a TSP, a TIACREF, then at that point, we will help you get set up with a custodian that allows you the ability to roll over a portion of your retirement account into a precious metals IRA. If you're doing a cash position, let's say you're taking savings and you want to convert some cash that you have in the bank, then at that point, we can offer you two things. We can either physically deliver the metals to you once we send you the invoice and customer agreement for your investment, or we can help set you up an account at a depository that will allow you to hold your precious metals there and insure your precious metals. And those are the two ways that we've been able to help people in order to help them diversify.
Got you. So you're saying a person could go and get themselves one of them brick of golds they see in the movies that everybody always wants to get their hands on.
Exactly. Listen, you can, if you want to buy a gold bar, we'll sell you a gold bar. If you want to buy coins, we'll get you coins. Whatever you want, it's available to you. So that's
What do
really
you
what it
typically
comes
see
down to.
more of? Do you typically see people buying more of the bars, or you typically see people buying more of the coins?
I see people basically buying more coins, 1 ounce coins, half-ounce coins, quarter-ounce coins, third of an ounce coins. Some people buy bars. They'll buy a 10-ounce bar. I haven't seen that many people buy a kilo bar. That one's quite an investment. But that's really what it comes down to. It's basically what people are comfortable with. Some people like fractionals. They don't want to buy a 1 ounce, a bar. They don't want to buy a 1 ounce coin. They want to buy a third of an ounce coin, a quarter of an ounce coin, even a tenth of an ounce coin. Why? Because, is it more liquid? Probably. You can convert it, into cash a lot easier than you would a bar or a 1 ounce coin. I mean, take into consideration a 1 ounce coin right now is going for around 3,700 or more. So that's quite a bit of money. And I'm not a survivalist or one of the preppers out there that you know uh, wants to have a specific amount of gold and silver if the lights go out. I don't think we're ever going to come to that, to be quite honest with you. But imagine that you did have a 10-ounce bar of gold. What are you going to do? Shave the gold off? You know, to barter. So it's easier to have a fractional coin. So that's and people take that into consideration.
And so, in my conversations with you, Rick, I've noticed that you're more of the physical gold, in preference, physical gold over ETFs or gold miners or things of that sort. Could you
Yeah.
kind of speak to that so the audience can understand the differences between your approach with American Republic Metals, your organization, as far as custodying, custody of the physical gold or in a gold IRA versus just buying,
So
you
here's
know,
the main
an
difference.
ETF.
Here's the main difference. When you're buying physical precious metals, you're buying it one for one. There is no third party counter risk. When you're investing in your portfolio, through ETFs or mining stocks, well, you're buying a share, security, and that has third party counter risk. So at the end of the day, God forbid if we ever had a financial crisis and the markets crashed,
Right.
who do you think has access to their gold first? The people that have it in an ETF and a mining stock, or the person that has it in physical?
Right.
And I can assure
Right.
you that the person that has it in physical is not going to be running for cover and panicking because they have it in their possession or in a physical format in a depository. They
And
don't
then the
have any third
miners
party
incurring
risk.
wages, the miner has to deal with, inflation,
Correct.
wages, skilled labor, things of that sort, right?
Correct.
Because that's going to hit their bottom line. And then the management fees from the ETF themselves.
So, that's really the difference. And so I tell people, listen, I'm not telling you that you shouldn't look at investing in ETFs and mining stocks. You should be diversified however you desire, but know the differences. And if you
Yeah.
know the differences at the end of the day, you're probably going to choose the one that has the least path of resistance, which is physical precious metals.
Gotcha. So I know a lot of people understand how the IRA works and how you do that and everything. So, as far as physical gold, what's the process behind getting physical gold from your company? Is there a limit or?
No, not at all. No, there's no limit. I mean, you can listen for IRAs. We always tell people they can start off with at least minimum $15,000 up. If it's a physical purchase, we will not do less than, at this point, less than $4,000 because again, that's basically practically an ounce right now.
Mhm.
So people need to also consider that in that regard. But no, there's no limit as to how much more you can buy. I mean, if someone came in and said, "Hey, I want to buy $1 million," sure, no problem. Well, one of the things that we pride ourselves in is that we deliver right now. We deliver within 10, 15 business days. We don't basically tell you, listen, it's going to be 30, 60, 90 days before you get your metals. No, we deliver right away. We want people to receive their investment as soon as possible and within retirement accounts even faster. The moment we lock in the trade, we basically submit the transfer to the depository and the metals are transferred within days. Within days. So that's basically it.
If it gets lost in the UPS or the FedEx,
So the
things happen. What do you?
Hey, it happens, no question about it. It's never happened to us, knock on wood. But if it did, while the metals are being transported to you
Mhm.
through
They're
FedEx or
fully insured.
UPS, we do have them insured by Lloyd's of London, and that way,
It's a
it
lot of insurance.
Yes, and we do it for your protection and ours because we don't want any problems. At the end of the day, that's really what it comes down to. So this is a good thing, and most precious metals dealers do the same. Their deliveries are insured by a third party, by Lloyd's of London.
So this isn't about, betting everything on gold per se. It's more so about using it as insurance, just like central banks do.
Yes, correct. And that's really how people should look at it, is an investment. Listen, it's very simple. I tell people nowadays, look, if central banks are buying up gold right now,
Which
don't
they
you
are.
think that you should do the same for yourself? You always follow the smart money. Now, I mean, the amount of money that is being transferred into gold by central banks is in the billions of dollars. And people have to ask that question. Why? Why are they doing
Well, I would tell you this: if I was a central banker, which I'm not, but
Yeah,
if I was a central banker and I had the capacity to obtain debt financing, right? Long-term debt financing, maybe 10-year notes, things of that sort, I would take on as much debt as I could and buy gold, knowing eventually that it's going to be revalued, right?
it?
And
Again,
so,
I mean, listen, without the revaluation, look at what gold has done in the
right.
matter of 5 years.
It's actually the top performing, I want to say the top performing precious metal. It's even outperforming Bitcoin this year.
I was
A
about
lot
to
of people
say
weren't
that.
talking about it.
I want to see what was your how do you feel about the correlation and everything they're saying between gold and Bitcoin, the pricing, and like he was saying, the movement.
Calling it digital gold, right? Gee, they're calling the Bitcoin digital
Correct.
gold.
Digital gold, yes.
Listen, Bitcoin is a very special case, and no one ever expected, cryptocurrency to go from pennies on the dollar to
$4 trillion.
over 100, exactly to over
Right,
$100,000, a coin. And
right.
with gold is not that speculative the way Bitcoin has been. Gold has always been a conservative, tangible, safe haven asset class that historically, if you really think, has outperformed even many stocks in the S&P because they're no longer even listed. They're out.
Right.
And so, you know, for thousands of years, gold has been used as currency for
Yes.
thousands of years. I'm a
It's the
religious man, but
original
I'm
money.
not exactly. I'm a religious man, but I'm not not that. I'm not a fanatic. But
But
I
what did I
can't
tell you
tell
about
you
silver?
right exactly.
We
But I
talked
can't
about the
tell
silver.
you correct. I can't tell you that in the Bible it says that man should own four things: gold, silver, land, and cattle. If the good book says you should own gold, silver, land, and cattle, who are we to question the
All
wisdom of
great
God?
investments. All
That
great
sounds like
Yeah.
investments.
a good money observation to me.
Who are we to question the wisdom of God?
So real quick, I know we're talking a lot about gold. How about silver? Do you foresee the same movement in silver? Because I know it usually when gold goes, silver goes as well.
Hmm.
Here's the problem that I have with silver. I like silver, don't get me wrong. But when I look at the gold silver ratio and I compare it to what happened in 2000, between 2008 and 2012, back then, gold went to a height of almost $1,900. Silver went to a height of $45 an ounce. Silver right now is at $42 and gold is at $3,700. Tell me what's wrong with that picture.
You
See
know
it.
my problem with gold, Rick?
Yes, it's too expensive.
No, not my problem with gold, rather. I misspoke. My problem with silver. Gee, I told Rick, I don't like silver. He asked me why. I said, because they
Mhm.
used silver to pay Judas. It'll
Yeah,
never be
yeah.
good in my
Listen,
book.
silver in the industry has had always a good and bad. They call it the poor man's gold.
Poor man's.
And I don't know if I like that title, to be honest with you. I just think that it has been suppressed on purpose because if you really think about it, based on the gold silver ratio that took place after the 2008 market crash to 2011, 2012, Silver right now should be at $80 an ounce. That's really my problem with silver, is
Mm-hmm.
that if I had seen the value of silver go from, $20 when it was at $20 right now to $60 an ounce, I
Mm-hmm.
would say, you know what? Silver's in play.
I get it. I get
But the
that.
problem that I have with that is that the legislation, the rules that the central banks and the banking industry are creating are not for silver. They're for gold, specifically for gold. But yet you have a lot of people out there making YouTube videos. Oh no, this is going to be great for gold and silver. This Basel III Accord. It's not for silver. It's for gold.
A lot of
The only reason,
misinformation.
the misinformation in that regard is really concerning, and it's upsetting because they're misleading people.
Because for me,
Because
I would have thought, silver and gold are going to move. It might be a cheaper way to get into some gains.
right, but it's not. It hasn't been the performing asset that people want it to be. They say, but it's gone up higher than gold right now, percentage wise. And I go, listen to me. I don't care about percentage. I care about a higher price point. You know, if silver was at 20 and it went right now to 42, great, whoopee. If you bought it at 20. But a lot of people didn't buy it at 20. They bought it at a much higher price. Now, if I compare to people that bought gold between 15 and 1800 and now it's at 36, 3700, the math doesn't lie. See, for gold, 1 plus 1 equals 2. For silver, 1 plus 1 doesn't equal 2.
So I would say this, guys. I would just say that it's a good money observation that folks who are viewing this should have their hands on gold in their portfolio, some way, shape, or form,
It's
preferably in its physical form, rather
correct.
than in an
Listen,
ETF or a gold
we,
miner.
right. We don't give financial advice and we don't give tax advice.
That's
But
right.
I will tell you one thing, that unfortunately people like to see a particular commodity go up in value before they do anything. And they don't like to get in when it's flat or not doing anything. Those that got in when it was at 15, 1800, believe me, they have a smile on their face from cheek to cheek. And even those that got in when it was at 22, 2500, they're, you know, they are jumping for joy. Those that are getting in right now have to look at the bigger picture. And the bigger picture is that central banks and governments are buying up gold to basically prepare themselves for what many analysts out there consider to be a global economic reset, which they feel will happen with gold. That's it.
So you heard it. All my rapper friends out there with all those big gold chains and bracelets and all that. Your time is now.
Exactly.
That's right.
Exactly. Exactly. I mean, at the end of the day, we're trying to help people educate themselves on how they can take advantage from what we consider to be the last gold rush in our lifetime. I think this is it. Everyone thought that Bitcoin was the digital rush, but gold, this will be the last gold rush in our lifetime. And I hope that we're able to help a lot of your viewers, and that they see the light, that they want to get more information, and that way they'll be able to benefit, because otherwise they're just going to miss out. There's nothing worse than getting the information and not doing anything about it. I mean, because people like that, all they do is complain that, oh, I should have done it. Should have, could have, would
I
have.
could have.
I could have. I should have. No, let's get it done. Let's get it done. This will be, again, you're diversifying. You're not putting all your eggs in one basket, and that's how it should be. That's how it should be. So, for those of you that are interested, contact Mr. Palmery, contact Guy. You can go to our website, American Republic Metals, sign up for our wealth protection guide. We will send you another guide as well, another two guides, one on the COMEX and one on the Federal Reserve and their decision to revalue gold, so that you can understand what their plans are and how you can benefit from it.
Yes, yes, couldn't have said
Absolutely.
it better.
Yeah, so I just wanted to leave us off, with a little bit of a takeaway from what I've gathered, right? I've mentioned it a few times, I'll say it again. Gold is the original money. It's God's money. It's naturally occurring, it's time tested, and it's battle proven, literally battle proven. Gold is good money. And so if countries and institutions and corporations and the like, wealthy families, and even specific cultural groups,
Hmm.
right? I don't even think we had a chance to touch on that with the
No.
bandit signs in the neighborhoods. We buy gold. So if those cultural groups are ramping up their efforts to accumulate and stockpile the gold, then we as retail investors and generational wealth builders should at least be aware of this activity. And more than that, we should strongly consider doing the same in our own way. And so, Rick, again, I appreciate you taking the time to join us.
Yes, definitely.
This is
Great
Rick
Thank
information.
you
Menjivar
for having me.
with American Republic Metals. If you guys would like more information, you can definitely DM me or Guy.
Yes, sir.
Thank you. Thank you for having me. I really appreciate it. And I hope that your viewers really enjoy the podcast and the information that we've shared.
Yes,
Absolutely.
definitely. Always good money.
Yes, sir. Thanks, Rick.
Thank you.